Welcome, everyone. It's when you can stop me and ask questions anytime you want to. Don't wait until I finish. I'll make it short. I can. We shouldn't go beyond 30. It's late, so stop anytime just to ask me any question, and then we'll start in the next 1 minute. All right, cool. Evening, everyone. Today I've been running a series earlier. Please, if you can hear me, let me know. Just give a thumbs up or something. Let me know you can hear me clearly. Okay, thank you. We've been running a series. We started with how to create an account. So by now, I am very sure most of you have CSD accounts, Central Security Deposit account. And we also spoke earlier on what stocks are and what the stock market actually means. So by now you should be very comfortable with what we mean when we say the stock market and what we mean when we say CSD account. And I had been posting consistently. I mentioned that instead of you walking to a bank or a brokerage firm and asking them for an account or to buy stocks for you, we can use a few digital services. We mentioned that there are a few apps there, like IC Wealth app, the Plus app, and also we mentioned lately I've discovered another app. It's called a Black Star app. I've tried it a bit myself, not for a long time, but just to understand how it works. So those are, and then we also said that you can use the Bamboo app if you want to buy international stocks. We said that the IC World app is really good for local stocks. And so, but then Bamboo is very good for international stocks. But after checking the Black Star app, you can use the Black Star app for both local and international stocks. And then the Plus app also helps you for just international stocks. So if you have the Black Star app, you can use it for both local and international stocks as well. Yeah, so but then do some reading about these apps before you go ahead and purchase them. Now, so with a CSD account created and everything set, how do you select stocks now that you have an account? How do you go ahead and choose a stock you want to buy? What do you look out for? I just want to, it's not a tool, it's not an entirely financial advice, but this can help you in choosing stocks, at least places to look out for and what you should read and what you should be aware of before you go ahead buying stocks. So I'll start it. Now I want to mention that even very experienced investors, they grapple with choosing the best stocks. So there's nothing like you can get it like sharply right, like you know everything and then it's going to work. No, not really. But what as a beginner you should be looking out for is the stability in the stock option. So if you choose a particular stock, you want to be very sure that it's very stable and it's something you can work with. The next thing is that you want to make sure that the stock has a strong track record. So for instance, if you are choosing Coca-Cola, you want to believe that Coca-Cola has been doing well fairly. The prices don't change that much. So when you look at the graph or you look at Coca-Cola, historically, it's been fairly stable. And so you want to bet on that. Now, you also want to look in the past and ask for that stock. For instance, if you are choosing MTN, for instance, the question is, in the past, has MTN been doing well? Then based on that, you can have a fair idea. And then you also want to see that there's a potential for growth in that particular stock. That's one reason why you want to choose that stock, right? Those are the things you look out for. Now, beginners should resist the temptation of gambling on risk stock. So you see, sometimes when you say you are an investor, see, an investor is different from a trader. Okay, forget what I do here, what I teach here is not doing, it's not trading, it's not like putting your money somewhere, then tomorrow you have made $1 million. No, like those things people do, they cash out 20 CDs. No, that's not what I'm teaching here. I'm teaching you a plan that you can use strategically to grow your wealth for years and years to come. All right. So don't be thinking about these crypto things they've been doing to make money on the short term. No, that's not how I look at it. We are showing you what to do to make money in a long term, in years to come, and how to keep your wealth in a long time. So again, take note. beginners should have long-term investment is slow, steady, but it's not a fast way of cashing out. Oh, you want in 2 days' time, you want to make money. No, that's not the plan here. So take note of these few things. Now let's go into it. I just want to show you a few pointers on how to pick a stock. All right. Now, first strategy for picking stock is what we call blue chips. Now, these are shares of large companies, well-established companies that are financially sound. So one, you can approach a stock market and say, you know what, I'm going to look for blue chips. Now, blue chip is not like there's one company called blue chip. No, the companies that are very large and they are well-established and they are financially sound. Historically, we call them blue chips. So a typical example is Apple. Over the years, Apple has been doing well, like for decades, for years now. Microsoft have been doing well for a very long time. MTN has been doing well since they came on the GSC. Since MTN announced going IPO on the Ghana stock market, MTN has been doing well since then. The prices have always been rising. Those of you who bought MTN when we started, who will remember it was around some pesos, but now we are in the 3 cedis. StanChart has been doing well since they listed on the Ghana Stock Exchange. So this is what we call the blue chip. So for every stock market, or in every market, there are blue chips. And blue chip is not as if you are looking for a particular company. Blue chips means that the company has been doing very well, is well established, and is financially sound. So one, you can enter based on this strategy that you only buy blue chips. So that can be a strategy you are adopting. All right. Now, why do people choose blue chips? Now, one, as for instance, if you say you are choosing one blue chip, like let's say MTN. Now, why it's a blue chip is that if you look at Ghana, MTN has the largest market capitalization right now. It's the one leading the market in Ghana, right? And it has a very dominant market position. For instance, if you take all the telcos in Ghana, or all the telcos, or the Momo companies in Ghana, MTN is the biggest. So that makes them a very solid company. So you can say, okay, if you are doing blue chip, I'm going for MTN because MTN has a good track record, has a strong background, it has a strong growth revenue. Now, you can also say, okay, I'm doing StanChart. Why StanChart? Why is it a blue chip? It's a long-standing financial institution. When they were closing all the banks, you never hear anything coming towards StanChart. They are doing really well. They have strong governance and they have consistent profitability. So you look at their histories. StanChart has been paying dividend for some time now. Another blue chip in Ghana is the Benson Oil Palm Plantation. You can say that they've been doing very well. If you look at their books, they've been doing well over time. So that's one way to look at a blue chip, right? Locally. So these are some blue chips in Ghana. And why are they blue chips? The reasons why we consider them blue chips, we have spelled all of them out here. So one approach is that you can go to the stock market and you say that, oh, as for you are looking for only blue chips. That can be your strategy, okay? Now, if you go internationally, a blue chip is Apple, right? It's the world's most valuable company by market cap. At the time I was making the slide, these things change all the time. They have consistent revenue from iPhones. They are doing really well in the market. People are buying iPhones every day. So you can say, okay, in the international market, Apple is a blue chip, so I'm going for only blue chips. Microsoft is another one. They dominate the enterprise software business. For years now, Microsoft has been. In fact, you remember when we were in school, we were learning Microsoft. So if a company can grow to an extent that you are studying that company in school, that should tell you how good that company is. So another one is Johnson & Johnson. You can be very sure that in the pharmaceutical industry and the consumer health, they are the top guys there. Over 60 years of dividend growth. Can you imagine? Older than you. So they are not going to collapse today. They are not going to collapse tomorrow. At least you can look at it from that perspective. All right. So I'll go back again. One strategy is that you choose blue chips. And blue chips are companies that do very well. They have a historical past that are doing amazingly well. So your strategy of investment can be that, you mean, I don't want trouble. I'm just going for the blue chips. And the blue chips, in any stock market, they are blue chips. They are companies that have a very good track record. I've listed some in Ghana, MTN, StanChart, and BOPP, Benson Oil Plantation. There's a lot more, right? But I'm just making examples. And internationally, you can look at Apple, Microsoft, Johnson & Johnson. There's a lot out there. Right, I hope I've made sense. Any questions so far? So one approach for you picking stock as a beginner is you can say I'm looking out for only blue chips, companies that have historically done well. That's all I'm going to concentrate on. Does that make sense? So one approach is to go for blue chips. One approach for finding stock is to go for the blue chips. That's one approach. Very good. Any question? I hope the idea of blue chips are clearer. So when you go to the market, if your strategy is to look for blue chips, it's easy. You just look for the big companies and invest in them. And you are believing that over the years, since they have been there over 60 years and they have been doing well, they will also well be there the next 60 years. At least when you are retirement, by then they will still be there. So that's it. Looking for the blue chips. They have been there before, and you are betting on the fact that they will still be there. So that's one approach. You can go and look for just blue chips. Any question? This is an easy way. You go for blue chips. Now, another stock buying approach is look for dividend stocks. Now, companies that regularly pay dividends can be a good choice for beginners. So this is one of my strategies I use. Okay, I have one strategy. One of them is blue chips, the first one. I go for blue chips. So I'll buy a stock in Apple, in Amazon, in Microsoft, in MTN, in BOPP. I'll buy a stock in the big guys, right? They are blue chips. And my next strategy is I look for dividend paying stocks. Now, dividend paying stock, like we mentioned, we said that there are two ways to make money on the stock market: capital gain or dividend. We said capital gain is that there's a growth in the price at which you buy the share. So when you sell it, you make money. And the dividend is the share profit they pay to you every month. So I can go to the market and look for companies that pay dividend. That's another strategy I can use. So I take company A, does it pay dividend? Yes, then I want to buy it. Does the other one that they don't pay dividends, so I'm not interested, right? So that's another approach. Now, dividends give you a regular income, which can be reinvested to buy even more stock, right? So you can say, my approach is I buy only dividend stocks. One approach we mentioned first, blue chips, companies that have very good background, very good historically. Another approach is that I can say I'm buying only dividend paying stock. Now, if you come to Ghana, MTN is a dividend paying stock. For instance, as of April 16, they pay dividend of almost 22 pesos, right? Right. Unilever in Ghana is also a dividend paying stock. As of June, they declared a dividend of 37 pesos that they are going to pay. So this tells you that Unilever is a dividend paying stock. And if you are somebody who buys only dividend stocks, then these are good options that you want to consider. Any question on the dividend side? So you can go for stocks that are blue chips. You can go for stocks that are dividend paying. That's one approach you want to approach it. Now, there's another one we call dividend aristocrats. So this is not just a blue chip stock, but also belong to selected group that has distributed and increased their dividend for at least 25 consecutive years. So you can go for a blue chip, which is a company that has grown over the years, but they may or may not be paying dividends. Now, there's also another set of companies that pay dividend, but of course, they might not have been there for over a long number of time. But there's another group of companies that have been there for over the years and have good financial records, but also pay dividends, and they pay it consecutively for over 25 years. We call them dividend aristocrats. So you choose one of the strategies that work for you the most. I hope at the end of the presentation, you have a fair idea which category you want to use. You need to have a plan. If not, if you don't have a plan, you'll be gambling in the market. You need to have a plan. If you don't have a plan, you gamble in the market. Please. First, I'll go back quickly again. You can say you are doing blue chips and they have shares. They are very large company, very established. They are financially sound. They have historical good track records. So they are doing very well. So your choice can be me. I'm a blue chip investor. So I only look for this kind of companies. Another one is me. I'm a dividend stock investor. I only look for companies that pay dividends. So you have a plan. You don't go swaying off. Of course, you can have a mixture of plans like 1, 2, 3. But you should know what you're looking for. You don't go, today they say Palantir stock is high, you are going to buy it. You don't have a plan. Today they say Amazon stock is high, you have gone to buy it. You will lose your money. You need to have a plan. Now, dividend aristocrats are companies that are blue chips, but they also pay dividend, and they've paid it consecutively for years. So you can say, me, I'm a dividend aristocrat stock buyer. I only buy companies that are blue chips and also pay dividend. That's your strategy, and you go for it. That's your plan. Examples include ExxonMobil, right? One of the world's largest oil and gas companies with a history of solid cash generation. Another one, Procter and Gamble Co., the consumer products with multinational. And another one is Walmart. They are the retail behemoth, right? So you have a plan. If you're a dividend aristocrat investor, it means that you only buy stock from companies that are blue chips and have paid dividend consecutively for a number of years. So that could be your approach. Another one is low volatility stocks. So this could be another person's strategy. So as for me, these company shares have historically had fewer price swings, providing more solidity to portfolios. Not for nothing, come for investors' heart rates. They often belong to defensive stocks. So for instance, typically Tesla is not going to fall in this category. Tesla, once Elon Musk says something, the prices jump up or jump down. So it's not a low volatility stocks, right? So you look for companies. You can be a low volatility stock investor. As for you, you only look for companies. That's why when you have made this decision, you are not swayed around. You are not moved around in the market. You see, stock market for long term, it's something you need to be strategic. So you are not moved around. If you don't have a plan, they'll move you around. Today they say Tesla has gone up. Today they say Palantir stock has gone up. Today they say this one has gone up, and you are just buying and throwing money around. No, you need to. For instance, we are saying Johnson & Johnson, Coca-Cola. Coca-Cola has prices don't go up and down. The stock prices have been fairly consistent throughout the time. So you want to look out for those kind of companies if you are a low volatility stock investor. I hope I'm making some sense here. So based on the category you choose, you can have more than one, but you need a plan to choose your stock. You need a plan to choose your stock. Thank you. You need a plan. Don't be thrown around. Stay with your plan. Stay with your plan. Or you're investing so that when you retire, you have money. But you get to retirement, there's no money because you have gone to play Jaskele with your money. There's another group called growth stocks. These companies may or may not pay dividends, but they grow. So for instance, you could see NVIDIA particularly can be a growth stock. So you see today NVIDIA is $10. It keeps increasing. Tomorrow NVIDIA becomes $20. They use their revenue to build the company. They don't pay the money back to the investor. So those kind of companies, you only get money from the capital gain, not from the dividend. But you can see they are always growing. So you can be if you are somebody who doesn't care about the dividend, or all you want is you want your money to grow, then you are a growth stock investor. So if you meet a company that is not growing, you are not going to choose them because you are a growth stock investor. So that's how you look at it. So based on your appetite and your taste, you choose a particular stock. All right. If you are a growth stock person, it means that all you care about is you really are not cared about the dividends and all those things. All you want is that you want the growth to grow. Now, remember, somebody asked, why would I do this? No, you do this for a lot of reasons. For instance, if you always roll back your dividend to buying new stocks, like for instance, anytime you buy company X and they pay you dividend and use the dividend to put back to buy new stock, it's as the same as a growth stock investor, right? Just that this time around, the company is doing the work for you. So instead of the company paying you back the money that you used to buy their stock again, what they do is that they just use the money to build the company. So the company, you see that the company valuation will keep increasing, but the investors are not getting any money essentially. Their money is only in the capital gain or the money they'll get if they decide to sell their stocks one day or in the future. That kind of stock is called a growth stock. So you, based on what you want to do. So a typical example, like I mentioned, of growth stock, I tell you NVIDIA. NVIDIA hardly pays dividend. All NVIDIA keeps doing is that they keep using their profit to discover new chips. You will not be getting dividend. You see that NVIDIA price is here today. The price just keeps increasing because they use the money to expand, to do more research, to discover a lot of things. The same thing with Meta. You hardly find Meta paying you money. All they keep doing is that they keep using to grow the stocks. Another one is Alphabet, Google. They just keep using the money to build a business. Another one is Amazon. They keep using the money to build a business rather than paying you dividend. These are growth companies. This happens especially in the tech ecosystem, right? These businesses need to compete. They need to be on top of their game. So they can't afford to be paying their money back to the investors. They need to keep innovating and building new things. So such businesses or that kind of approach is called a growth stock investor. So all you do is that you just see the price of your share grow, but you really don't get the money back into your account as dividend. Any question on the growth stock?
Question.
Yes, please ask.
Yeah, please. Then, at which future time do you get something from the growth stock?
So the growth stock, you have to sell off. Yeah, it's like capital gain. So if like after 10 years, you can sell off your money. So for a typical example is NVIDIA. You know, when NVIDIA started, NVIDIA was as low, but now NVIDIA shares almost getting to $200 and something, right? So even the people sold their shares now. So you sell it off after 10 or 20 years based on your strategy, right? So you need to have a plan. I'm going to sell it off after 20 years. So after 20 years, you sell it off. And if you have 100 shares, which you buy $10 at the time you bought it, it means that you have 1,000 CDs when you invested, right? But you had 100 shares. Now there's something we call in the stock market, you have virtual wealth, right? So let's say if you own 10 shares, you never lose money, or you never lose money in the stock market unless you sell it. So when you buy a stock, you have bought a number of stocks. So you have 10 stocks, and it'll be 10 shares in the company for as long as the company grows, right? You only lose money if you sell it. So even if the price goes all the way down, so long as you have not sold it, you have not lost anything yet. That's why an investor, a long-term investor, should not be worried, because you still have 10 stocks, 10 shares in the company. If you go ahead out of haste and sell it, then you've lost your money. So after 10 years, assuming that NVIDIA is now $200 per shares, then after that 10 years, then you are now selling the 10, then that's like $2,000, right? Or something like that. Yeah, then you make your money at the point you sell it off. So growth stock, you only get money when you sell it off after some years.
Okay.
There's another group called defensive stocks. Now, these are companies that in down times, they don't lose value. So for instance, during Buhari says that COVID-19, not COVID-19. So for instance, during COVID-19, the health industry was resilient, right? So stocks in that area, health, food, some of them will never, they are defensive. Even when they are down times, they can survive. So sometimes you might want to be a defensive stockholder, which means you only invest in businesses that no matter how the economic conditions are happening, you are not affected. You can be a defensive stockholder as well. For instance, people argue that health companies and then retail companies like Walmart and whatever, they never go down. They're able to stand in difficult moments. Of course, that approach is a defensive stock option. For instance, in the food, medicines, and utilities, even if they are difficult times, they're able to stand. But that approach is what we call a defensive stockholder. So you can go for that approach as well. Example is the Procter & Gamble. It's a consumer brand. People keep buying soaps and toothpaste. Whether there's COVID or not, you need to paste, you need to bath. Unless people reduce the number of baths they do in a day because there's COVID, fair enough, but they will still bath anyway. So another one is Johnson & Johnson. It's a healthcare brand. Whatever happens, people will still have to check their health. Like I mentioned, Walmart, people will shop, even though the number of shoppings might cap now. But once Walmart does delivery, even if people are in downtime, they'll still buy food. Another one is Pfizer. I mean, you know, the COVID-19 vaccine producers. So they are able to resist shocks in downtime. So we call them defensive stock. Now, another one is called electronically traded funds, right? Now, they are not really stocks per se, but they are traded like stock. So these are, so for instance, in developed worlds, they put a number of companies together. For instance, the S&P 500. S&P 500 are the top performing US companies. They group them together. We call them S&P 500. And they are funds that allow you to buy all those 500 companies by paying one. So for instance, if I invest if I invest $50 in ETF, the ETF will split the $50 over all the 500 companies. So these are easy ways for you. If you are finding troubles choosing a particular stock, then you want to look into what to call ETFs. There are a lot of ETFs out there. I'm not sure if I've listed yet. There are a lot of ETFs out there. But what we mean when we say ETF is that ETF means that they go and buy, they don't buy one particular stock for you. Okay. They look for a lot of companies that are doing well, a lot of them. Okay. And they put them together in one basket. So when you buy $10, you are literally buying all those 500. You know, S&P 500 are the top 500 performing companies in the US. So when you buy an ETF, there are several ETFs. There are lots of them. But you see, you see if it's in an ETF, you see the companies that are in that ETF. So a typical ETF, for instance, might contain NVIDIA, Apple, Amazon, Google, like all of them, Meta, all of them in one, up to 500. So if you have trouble selecting a particular stock, you may want to look for a particular ETF and just invest in the ETF. The fund managers will decide, will just go and buy it for you on your behalf. All right. That's what happens when you are doing those things. Now, these are some ETFs. Of course, there are some ETFs we also call quality factor ETFs. So they invest in companies with solid balance sheet. So the investors will look into it. By example of this include, like I mentioned here, we have Invesco S&P 500 quality ETF. So you see that they all end with ETF. So if you are looking for a fund that does ETF, you mostly will find the end of it ETF. ETFs are good for you who doesn't want to go and pick a particular stock. You don't want to risk buying only Apple. So your $100 now use it to buy an ETF that contains all the plenty other companies that there is. Any question? Any question about the ETFs? First, you need to understand S&P 500. S&P 500 are top 500 performing companies in the US or the New York Exchange. We don't have that in Ghana. Yeah, maybe somebody can build that in Ghana. But if only we have 500 companies in Ghana doing well, I'm not sure. So ETFs are, there are funds that they trade like stock, but they go to buy plenty companies in one bulk. A typical ETF would be VOO. One of the popular ones is called Vanguard S&P 500 ETF. But like I mentioned, if it's an ETF, you find the word ETF inside it at some point, all right? And when you say ETF is electronically traded, which means that they literally buy a lot of companies for you. So you see one ETF, you see, if you have the Bamboo app, you'll be seeing VOO, Vanguard S&P 500. I do Vanguard S&P 500 a lot. And you see, averagely, it has returned 26.2% per annum, like so far, even in 2024. This is what it returned, right? And so there are a lot of ETF. This is another one, SPDR, S&P 500, SPF. They have paid, these guys have paid closely to over 26% annually in return, right? And these things we are talking about, I mean, these funds, they are US backed. So these returns are average around that. Don't be comparing it to our Ghana returns like that here. So ETFs are, they buy mostly S&Ps for you. So if you don't want a headache of choosing a particular stock, just go for an ETF. See, Warren Buffett says that if it's no more there, the wife should just buy S&Ps or ETFs. It's simple. Like top 500 US companies combined into one, just buy it. If you don't want trouble, all right, just buy it. If you don't want to choose one, then just buy the ETFs and you are good to go. Any question? I'll run over them briefly again. I don't like to take a lot of time on these things, and then you can ask your question. For those who are late, please, you can go ahead and ask them. Yeah.
So the brokers.
Yeah.
Is it apart from Bamboo, or We do Bamboo, but some of the stocks you
So
mentioned
there
here,
is
I think
another brokerage service I have used before. It's called, let me find it for you. Um, those in the US would have, so I think it's called Interactive Brokers. There's another one for the international stock. There's another one called Interactive Brokers.
okay.
There's another one called Blackstar app. I just discovered it recently. It's the website is called blackstargroup.ai. If you go there, you have to put in your number before they can send you the link.
Black Star Group.
Yeah, blackstargroup.ai. You can use Interactive Brokers as well.
Okay.
Right, I'll go over this. We mentioned that we have blue chips, and we say blue chips are companies that are very large companies, and they have been doing well over the years. Right, they have done well over the years, so they are popular companies. We have blue chips in every economy. For instance, in the US, you have Apple, Microsoft. They have been doing well, no doubt about them. Your strategy can be blue chip, which means that you only buy these big companies. You don't buy the small companies. If you come to Ghana, MTN, StanChart, and like I mentioned, yeah, these are some of the blue chip in Ghana. And there are reasons why they are blue chips. The blue chip is not a particular company, but it's an idea of big companies that are doing well. So you can be an investor who only buys blue chip. All right. You buy only companies that are big and they are doing well. Right. So these are blue chips in the other words, Apple, Microsoft, and I'll share these slides with you so you can go over them if you need to understand them again. No, you don't need to understand the word, but you need to understand the strategy. Another one is a dividend, which means that you as an investor, you only buy companies that pay dividend. That can be your strategy. That's how you choose your stocks. So when you choose a particular company, you check if they pay dividend. If they don't, I'm out. I don't buy companies that don't pay dividend. All right. That can be your approach. You can be a dividend aristocrat, which means that it is a dividend paying and it's also a blue chip. So me, I only buy companies that pay dividend and they are big companies. So it means that you won't be buying something like NVIDIA. You should not be going near NVIDIA because NVIDIA, they don't pay shares like that. You get it. So when you have a plan, you know which companies to choose. You don't just go and be buying when people are buying. You choose what you want based on your, there's what you call low volatility stocks. They are companies that are resilient. Their prices don't change plenty. So somebody like you who is a low volatility stock investor will not buy Tesla. All right, because Tesla is so volatile. It changes. The price just keeps changing all the time. You perhaps won't be investing in anything Trump is investing in. Growth stock. Growth stock. These companies, they don't pay dividend. They use the dividend to grow the business. A typical example is NVIDIA. You buy NVIDIA $10 today, you see that after 5 years' time, a share price is $200, but they've never paid you any dividend. So you only make money from capital gain when you sell your stocks, right? If you are that kind of investor too, you can just go for that. Somebody asked, why would I be a growth stock investor? It's simple. I mean, if you buy shares in Apple and they pay dividend and you use the dividend to buy stock again, and that's how you grow your stock, then you could have just gone for a growth stock as well, because then the company will be doing it for you on your behalf. They won't give you the money. They'll just use to be growing the value of your stock. That's all. So there are reasons why people want to invest in growth stock as well. Defense stocks. They are companies that withstand economic downturns. They are not affected by what is happening. Example of them, people in the consumer sector, the healthcare sector, the retail sector, and the pharmaceutical, they are defensive. They really are not affected by what's going on. ETFs, we said that ETFs trade in, they don't buy one company, but they buy a number of companies, and mostly they buy the S&Ps. And we say the S&Ps are top 500 companies in the US that are performing really well. So ETFs, they group all the 500 companies into one and they buy it at once for you. And we said there's another type of ETF that we call the quality ETFs. And they look for those ones that have a solid balance sheet. They invest in the S&P, but they have a solid balance sheet. That's what they do. And we say the example of the ETFs are this and that and that. But the point is, if you go, you should see ETF in the name, at least from the basics. Or if you go on that you will see the list of companies that they have invested in, which means that if you buy a Vanguard S&P 500 ETF, if you buy $100, the $100 will be split into all the 500 companies that they have invested in. It doesn't mean they will split it equally. No, the fund managers will decide how the percentage allocation. That's not yours to decide. And that's because you want to choose an ETF. Or else you could have used your own $100 to buy Apple, buy the amount you want for the specific companies as well. You can do that as well. But if you don't want to do that, they give it to an ETF fund to buy it for you. Right? Thank you. Any question? If not, we are closing for today, and I will host another section another month. We host a session each month. Yeah. Any question? Are you?
Hello.
Yes, please.
Yeah. So maybe I came in late, but so for somebody who wants to start right now, what platforms can we use?
Okay. If you have access to an international stock, use the Interactive Brokers. There's an app called Interactive Brokers. I'll share the link after this as well. Or Bamboo. Bamboo is the easier one. If you are not in the US, Bamboo is your easy bet. Bamboo, Interactive Brokers, or Black Star app. They allow you to purchase any of these stocks internationally. Those are the But
So
if you
sure. So we create an account there, and then
they'll do KYC for you, and then they'll get the approval. Then you can just, when you are going through the stocks with this idea and understanding, you know what to choose exactly.
Okay.
If you are interested in the Ghana stocks, then your apps will be the Black Star app, the Plus app, and the IC Wealth app. They allow you to buy Ghana stocks as well.
Okay. So I would want something for US.
Yes. Yeah. Okay. Yeah. So then you, Bamboo or Interactive Brokers.
Okay.
Yeah, Monarchy, I think if you could list that category.
Or the other apps. Okay.
Yeah, because we do hear a lot of things on these things, but sometimes the basic thing about the steps.
Yeah.
So you can even make like a list of maybe number 1, you download this app, you make you register here, then 2, you do this, 3, you do this. That simple step can help most of us. Yeah, because sometimes we are good at listening, but taking action becomes a problem. So
I'll take my time, clearly list out the steps.
Okay. Thank you.
Yeah. Sure. Any at least, but for today, please understand, if you go to the market, this understanding should guide you, at least from a basic, know what to do. Of course, you can read further about them, but this should guide you if you are looking at any stock, whether you are interested in this or not. And in fact, look at stocks not as forex trading. You are an investor, you are not a trader. Trading is another discussion we can have. But investors don't buy stock today and they are selling it tomorrow. Investors hold for a long time. I know you want
I have another question.
Monarchy.
What would you suggest for let's say one stock which you can relax about, let's say for a long year, and then one for emergency wise?
This is not financial advice, but I'm willing to always share. I always go for the blue chips, okay? First, then I go for ETFs. That's how I do my things, right? I go for blue chips and I go for ETF. And ETF, I do the first one, VO and SPR. Those are the ETFs I do. I do VO and SPR. And then I go for the blue chips, these guys, or I do Apple, Microsoft, I even do Amazon, like those big guys. That's Google, yeah, all those guys. And then Ghana too, I do these blue chips in Ghana. Yeah, that's what I do. But then if I'm going to do anything again outside this one, I'll go for a dividend paying stock. Something that I'll be getting. My idea is that even if the company decides to close after a few years, at least I cash out small, you see. That's how I look at it.
So Fidelity, I know they have some things, but do you think it's a good company I could use?
They have a brokerage service.
Yes.
Yes, if they have a brokerage service, just make sure that whoever you are looking for. So I don't know how the central bank in that country at least says that they are a licensed broker. At least that should be there. So for instance, if it's Ghana, if IC World, you have to make sure that Bank of Ghana is saying that IC World is a licensed brokerage firm. Then you can go ahead with it.
Okay.
All right. Yeah, those asking for, yeah, I'm recording the session, so it's available after you to refer to it anytime. All right, cool. Yeah, thank you. Unless there are any questions, there are no questions. Thanks for joining and see you another time.
Thank you very much.
Yeah.